My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends? I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me 1-800-743-CNBC. Tweet me, Jim Cramer. My week for Palantir is finally over. The week where we get results from an insane number of big companies, including companies like Alphabet, Amazon, Apple, Meta, Microsoft. So many companies that it's almost impossible to remember what's driving these moves. It has finally concluded. As the Dow gains 289 points, S&P advances 0.41%, and the Nasdaq jumps 0.80%. We ponder, how good was Amazon last night? I forget. I mean, it was good, right? Pretty fabulous. How weak was Apple? I don't know. I mean, maybe better than feared. In the end, the tech titan action this week was more about who could tell the best story, which surprisingly was Alphabet, and the parent of Google, and who had the biggest blowout, which was Amazon, which had a poor number last time. You know what? It's a travesty that all these companies report during the same week. No one could possibly study all of them and make good decisions in such a short period of time. And I say that as someone with a travel trust that owns every single one of those stocks. There's a reason why we have a whole team. Otherwise, I would have gone nuts years ago, as opposed to just this week. Now, I remain steadfast that every one of these names, including Apple, is good enough to own. Apple's the only one that's too expensive if they can't exceed the projections for the current quarter. But the adjustment for Apple's disappointing outlook has now been made. I bet the stock settles between 210 and 220 next week, and I will be pounding the table. The others can be bought at these levels now that they've all come down, except from the highs, except for maybe Amazon. I mean, Amazon was at 161 when I pounded the table last time. It's going up all the way to 197. Wasn't it easier to buy in the 160s? No, because people thought it was going to the 140s. Now, with that out of the way, let's go to the game plan. We have still one more bombardment of earnings, but I want to start the game plan in the middle of the week. Oh, look at this. It's on Thursday. That's an odd thing. Arguably more important than the stock market is the Federal Open Market. I mean, for the stock market, than the election is the Federal Open Market Committee meeting. And why is this? Well, this is so important because bonds keep going the wrong way. For instance, today we got this incredibly weak non-farm payroll report. It was distorted by hurricanes and labor strikes. But at first, the bond market reacted positively. Interest rates came down. I thought that was going to be terrific. But then bond sellers came back with a vengeance, and long rates screamed higher, reaching their highest level since early July. In my opinion, the Fed needs to cut rates again. In the last couple of weeks, we've heard from too many businesses that have made it clear that we have a real slowdown on our hands. The economy's a little shaky. The bond market didn't like it when the Fed started cutting rates in September, though, despite a relatively strong economy and a healthy labor market. So you could easily argue that if the Fed cuts again, maybe we see a similar negative reaction. But honestly, you know what? I don't even care. At this point, in my view, if the Fed cuts rates next week, psychologically, there's some hope that we could see a pickup, particularly in housing and autos, two industries that seem to be losing strength by the day. It is vital for the Fed to recognize that it needs to cut. Then again, before the Fed meeting, we have Election Day, and both candidates seem to be eager to bust the budget. The only question is whether they can get their agendas through Congress. Very difficult. And yes, Trump would be more of a budget buster than Harris because big tax cuts translate into a bigger budget deficit. Oh, and just to be sure, election night coverage, I'll be here Tuesday, actually right on the set, believe it or not, with my colleague, Carl Quintanilla, and we're going to be offering election coverage like none other. It'll be a late one. I hope I don't have to pull another all-nighter like we did with that Chevron platform last week. Hey, by the way, Chevron had a fantastic quarter this very morning. It is still cheap. Now, back to the pedestrian earnings reports. Well, not all that pedestrian because you know what? It starts with Berkshire Hathaway, which they actually report tomorrow, but we'll dissect it on Monday. There's no such thing as a bad quarter at Berkshire, right? Because we're dealing with Warren Buffett. I do want to know what he thinks about the election, but I know what he'll say. He'll just say, listen, he'll make money no matter what. Okay. Next, we've all fallen in love with nuclear power. And that means we like Constellation Energy. I've been recommending this stock for years, but I think it's become a cult stock, and it doesn't matter what they have to say. Same as Palantir, which reports after the close. Palantir stock is one of the best performers of the S&P 500 this year, and the cult members who own the stock, they seem eager to push it up to exceed the 2024 percentage gain of NVIDIA. Right now, NVIDIA is up 173%, Palantir is 144%, so it will require some heavy lifting. Now, they could pull it off. So if the stock gets hit on its numbers, I want you to buy some. This very evening, by the way, NVIDIA got added to the Dow Jones average, and Intel got the boot. Now, there's not a lot of money indexed to the Dow, but it is fabulous for bragging rights. The NVIDIA stock should not have gone up after the bell on this, but it doesn't matter. People get excited about things. It's insane to watch these buyers, by the way, in a Palantir, who don't really care how a company's doing. They just buy the stock because they want it to go higher. But then again, how else do you explain the heights that Trump Media and Technology Group has traveled to without any earnings? I draw no conclusions. Tuesday, we'll hear from Builders First Source, the big distributor of housing supplies, and I bet they tell you the same thing I just said a few minutes ago. They need rates to go lower to have a lot of business to be reignited. The king of vehicles reports on Tuesday, too, and I'm actually talking about Ferrari, which is a monster of a stock. Everything luxury, and I mean everything, has been doing poorly because of China. See, it doesn't matter for Ferrari because Ferrari is more of an American stock. It would be shocked if it didn't have more upside surprise. People keep betting against it. That's been a sucker's bet. Now, the most intriguing story coming up next week is Supermicro. We know this company is on the firing line after its auditor, Ernst & Young, resigned noisily this week because they couldn't swear by the numbers and no longer trust management. Suboptimal. I have no idea what Supermicro is going to say. I do know this. Ever since Ernst & Young resigned, one of Supermicro's key competitors, Dell, has seen its stock march relentlessly higher. I think that's pretty ominous for Supermicro. Wednesday, CVS reports, and we'll learn about new CEO David Joyner's turnaround plans, we hope. He's got some real heavy lifting to do because CVS has a very jumbled set of assets. I'm rooting for him. Poor guy needs all the help he can get. After the close, ARM Holdings reports. Now, this chip architecture play is tightly linked with Apple, but ARM's IP is everywhere. I think it prints an excellent number, but you know what? That might not matter to this particular stock market if it's in a bad mood day, because the semis have suddenly become mood dependent, not earnings dependent. We also want to know about ARM's lawsuit with Qualcomm. Seems very nasty. Hey, speak of the devil. Qualcomm reports at the same time. Now, there have been stories floated about how CEO Cristiano Amon has been interested in buying Intel. They want to buy him. I think he has to move fast because after the quarter Intel reported yesterday, that stock's going higher, regardless of whether it's been booted from the Dow like it was this evening. Qualcomm itself is quite charmed. It tends not to go down on weak numbers, and it soars on strong ones. Wow, that's a very good risk-reward, isn't it? The best networking story to own out here is Arista. That's right. It's a hyperscaler helper. And it makes network switching equipment that's ubiquitous in the data center. It reports after the close Thursday, and it is a buy. DraftKings also reports after the bell. And, you might be shocked to find out that there's gambling going on here. I think it's a terrific story and a very good investment. Now, we get results from Cloudflare, too. This is a network security play we've had on quite a bit. I think it's got a great setup. Pinterest reports, and it's coming on the heels of an amazing quarter from Reddit. Maybe there's new money coming toward Pinterest, too. These are affiliate plays that are, I think, have a great niche market for advertisers trying to reach hard-to-get people. And Affirm drops its numbers, too. And we know this buy now, pay later enabler has been crushing it. Stock's been almost straight up since it reported last time. Finally, on Friday, here's a company I haven't talked about in maybe 30 years. Here from Flora. I'm not kidding, 30 years. It's an engineering construction company that I'm actually starting to hear good things about. Makes sense given all the infrastructure spending over the past couple of years. But the bottom line, even with all these earnings reports coming next week, at the end of the day, the market's still going to be hostage to the election and perhaps more important, to the Fed meeting. Let's speak to Gregory in California. Gregory.
Jim, as you may recall, I am a very proud early club member. And I just love what you and Jeff do.
And I do recall, and I've recalled your very kind calls to the show, and I really thank you. It means a lot to me.
Oh,
thank you.
It's my pleasure. You really are the best. I'm calling about a stock that I know is in some ways a favorite of yours, and one you actually recently said is the clear winner in autonomy. Now, they had a fantastic quarter. They weren't expected to. They had a huge pop, and the stock has just dropped and dropped. And I just wonder, as a member of the club, you're out of Ford. Why wouldn't you pull the trigger on Tesla, which is a great car company and so much more?
You know, it's funny, Gregory. I have been actually debating that and going to Jeff Marks with it because we talk about these ideas together. And the reason is because I felt that quarter showed you not only a great car company, but they're also a great technology company. And I actually want to take what Gregory says under advisement. I listened to all the members of the club. This may be the right time to do that, Gregory. I'm going to kick it around this very weekend It's my wife's birthday, Lisa, and you know what? There's room for both discussing Tesla and being with my wife, because why not? I've wrecked my marriage enough this week. Why not just make it Saturday, too? All right, despite all the companies we will hear from next week. Oh, that advantage being true, right? Next week, the market is going to take its cue from the election and the Fed meeting. So buckle up. Hey, special Fed meeting on Thursday, by the way, highly unusual. Now, on Mad Money tonight, elevator maker Otis Worldwide pulled back after delivering earnings earlier this week, citing, weakness in China sales. I got the CEO. Let's put this thing in perspective. Plus, some courtroom complications have been affecting Abbott Labs this year. I'm seeing if yesterday's ruling in their favor could be a catalyst for success. And later, GoDaddy's CEO is joining me to break down how the company's AI work is shaping the state of small business. I had never heard of him until I realized I've been using him for years. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.